Hello and welcome to CNBC TV18's Mumbai newsroom. I'm Sumaira Abdi and you're watching Your Stocks. Joining us today on Your Stocks is Shahina Mukadam, an independent market expert, and Gaurav Ratnaparkhi, who's a technical analyst at Sharekhan. So thank you very much to both of you for joining in. The first query that we have comes in from Ramesh Rajgopalan, who calls us on the line from Chennai. Hi sir, good afternoon. How can we help you?
Good afternoon. How are you?
I'm good, sir. What about you? What can we help you with?
Thanks. Just wanted advice on three shares. One is Asian Paints, which I bought at 920 about 3 years back, just before the COVID. And Garware Technical Fibers, around 500 shares at 1020.
Okay.
And Tata Power at 120.
So are you
a long-term investor?
Okay, are you in need of funds or is this just a routine check?
Yeah, that's what I want to know because the market is going up and down, right? So I thought, can I take some profits out and then, use it for other purposes, with maybe my education or whatever it is, domestic expenses, and then again re-enter at a slightly later stage,
Okay, fair enough. Shaina, a long-term investor, he has, for his stocks, the question is whether he should take money off the table when it's still available and look for a re-entry at lower prices later on. What would you recommend?
Well, what I see is that the markets are going to be very volatile, and we are seeing an escalation of the global tensions, especially Russia, Ukraine, and European banking system is also now facing a lot of challenges. Now, all these factors put together could put a pressure on the overall market in the, I would say, shorter term, next quarter or so, and thereby stocks that he's holding, like for example Asian Paints, which have a high valuation, but our portfolio stocks could see some bit of correction. So if he needs the money, yes, he can look to book partially, but all the three stocks that he's holding, I would say, are stocks that he can hold for the long term if he doesn't need the money and if he is willing to see some bit of volatility in the stocks. Asian Paints, of course, one doesn't really need to talk much about it. 98% of its turnover comes from from paints business, and it's a very strong brand doing pretty well. First quarter numbers were very good despite the slowdown in consumer demand that we saw across other sectors. So Asian Paints, expensive valuation, it's about 65 times FY24 earnings, so it's not cheap. It could see some bit of correction. If he wants to book partially, he can book. Garware Technical, it's a slow moving stock, and it's not really done very well in terms of either growth in financials as well as stock performance, but it's got a very strong position in its own textile segment. And internationally also, it's got a very strong position in terms of market share. So if one is holding, I think one can see a decent, upside even from here. So one can continue holding, and I think the last stock that he mentioned that he has got is Tata Power. There, of course, you can see some bit of correction, but Tata Power is very well placed now in terms of long term. The way it's positioned in renewable energy as well as in its other segments, it's doing much better. So all three, one can take a bit of profit if you want, if you need the money, but otherwise you can hold.
Okay, Gaurav, what about you? What do you recommend?
Yeah, so basically the investor has got entry at very good levels and he's having decent profit, but still he can hold on to his positions, especially in Asian Paint. The medium to long term structure is quite positive. What we are seeing since last few sessions is a short term dip, but with that it is approaching its 200-day moving average as well as crucial weekly moving averages. So in fact, Asian Paint is offering opportunity to add more. One can add more at around 3200, 3150, and he should hold on to his long position. Garware is where I would suggest he can book partial profit. And for the rest of the position, he can keep a stop loss at 3200 and hold on to his position for targets beyond 4000, say 4100 around. And the third stock, Tata Power, this stock has been in a correction since April this year, but nevertheless, it has now taken support near 61.8% retracement of its previous rise, which was seen from June to September. And that 61.8% retracement is good level to add more. So I would suggest add more near 210, 204 levels and keep a stop loss of 190 and expect the stock to go back to 280, 300 levels.
Okay, Mr. Rajgopalan, there you have the recommendation that you were seeking, not just profit booking, but in some cases you can even look to add. Up next, a query comes in from Mumbai. Sudeep Sharma has written to us. He says he has 25 shares of Intellect Design Arena at 980. He's a long-term investor and wants to know now whether he should hold, considering that he's making a loss, or should he get out? Should he exit the stock? He's also looking to make an investment in Nykaa at current levels. So, perhaps looking at switching out into and whether Nykaa is the right stock. Gaurav, do you have enough data for Nykaa? And what about the Intellect Design shares that he already holds? Should he exit?
Yeah, so in the case of Intellect Design, basically after a pretty strong multi-year rally, the stock has now been in a correction mode since April of this year. And this correction is developing in a three-way fashion. The third leg started from July 2020, and this leg so far has achieved 61.8% of the first leg of decline. And the structure suggests that in this typical case, the third leg tends to achieve equality with the first leg, which means the stock can go back to the levels of 400. So you'll have to bear with the pain of around 100 rupees more from current level. Alternately, I would suggest exit at current level and start accumulating once the stock dips to the levels of 430, 420, and then that will be the ideal level to get into this counter. Coming to Nykaa, in terms of trend, the trend is down on multiple time frames. The stock made multiple attempts to show signs of reversal, but it fizzled out near its Delhi upper Bollinger Band. But now the stock is approaching its crucial supports, the lows seen in the month of May as well as February. And in terms of price pattern, the stock has a potential to form a triangular pattern. And in that case, the stock is approaching actually lower end of the pattern. So in terms of risk reward, the risk reward is definitely in favor of adding more on the long side. He can buy at around 1200, 1180, but needs to keep a strict stop loss of 1140 on the downside. And once the stock surpasses the level of 1400 on a closing basis, then we can see it turning positive from not only from short-term perspective, but also from medium-term perspective. And in that case, it will have a substantial upside potential.
Okay, Shahina, what about you? Should he exit Intellect Design and look to make an investment in Nykaa?
I would avoid coming to Nykaa. I would avoid because they've come out with a bonus issue. 3rd of November is the book closure date, and it is 5 shares for every 1 share held. So if there's any movement now, it's actually just linked to the bonus. So unless you're doing some tax planning using the bonus, I think you should just avoid. It's an extremely expensive stock in terms of valuation. In terms of Intellect Design, also I would not add at current levels. 55% of its revenues come from international markets, and as we know, banking, finance, insurance is going through a difficult phase internationally in terms of order book. They could see some softness, so I would not add either of the stocks as of now.
Okay, up next, we have a caller on the line with us from Bangalore. Monesh B is on the line with us. Hi, Monesh. How can we help you?
Hi, good afternoon.
Go ahead.
Yeah, I have 100 shares of Karnataka Bank bought at the rate of 89, and 100 shares of Jain Irrigation, which I bought at 52 rupees. So I am a long-term investor. Can I have a 2 years view? I can hold these two stocks for 2 years. Thank you.
Sure. Shahina, first to you.
I think he can continue holding both of them. Karnataka Bank, small cap bank, it can go, I think it can recover to 100, 95, 100 type of levels, because performance of the overall sector is improving, demand is picking up, as well as, Karnataka Bank balance sheet is improving. So one can see better numbers, and it's extremely cheap in terms of price to book, less than 0.3 times. So there you can continue holding. Jain Irrigation, recently the biggest problem is the big debt, and they've not been able to really monetize their international assets properly till now. But recently they've had this arrangement with Rivilis, where their irrigation business will be merged with Rivilis, and that money, which is quite a bit actually, 2,700 crores, that is going to be received by them and used to repay the debt. So it will become almost debt free. And Jain Irrigation will continue hold about 22% in this merged entity with Rivlis. So I think a lot is happening on that front in terms of reorganization of his business. So I would continue holding both.
Okay, Gaurav, what about you?
Yeah, out of the two stocks, my recommendation will be to hold on to Karnataka Bank. This stock is having pretty decent structure, and we can see since the month of May, each short-term decline has been taking support near its crucial daily moving averages, from where we are seeing fresh round of buying emerging. And the same is the case currently. The stock is currently trading near 20-day moving average. At the most, it can dip towards its 40-day moving average, which is around 80. But at that level, it will be again an opportunity to buy, keeping a stop loss of 75 on the downside. On the higher side, I'm expecting the stock to test 100 and can even test 110 from short to medium term perspective. So Karnataka Bank, you should definitely hold on to. In the case of Jain Irrigation, my recommendation will be to exit. The stock had a pretty sharp rally from April 2020 till October 2021. But since October 2021, it has been trading in a range-bound manner. For last 1 year, it's going nowhere, and the structure is indicating that there is potential for the stock to start declining from current level. So it is better to exit from Jain Irrigation at current level.
Okay, Monish, that's the advice for you. Up next, Ramana Madhuri writes to us from Patna with a query. He says he has 900 shares of L&T at 1365. He's a long-term investor and wants to know, about this stock, whether he should remain invested, book his profit and exit. What should he do right now? Gaurav?
In the case of L&T, I think you should definitely hold on to the position. The overall infra space is looking quite attractive, and this particular counter, L&T, is likely to be one of the leaders in that space. And the overall medium to long-term structure is indicating that the stock is forming wave extension, which means the rally is not yet over and it has multiple legs to unfold on the upside. And current short-term correction is actually an opportunity. If the stock dips to the level of 1800, it will be a very good opportunity to buy again on the in this counter, keeping a stop loss of 1740. And on the higher side, the target will be around 2050, and beyond that 2200. So definitely hold on to L&T.
Okay, Shahina, you agree?
Yeah, I would concur. L&T is a stock, one can continue holding, has done pretty well in the last couple of quarters. And I think the order book position is very strong even now, 7.5 lakh crores plus. And across sectors, especially infrastructure, water, power, oil and gas, margin. And the company has indicated, management has indicated a 12 to 15% revenue growth, single digit EBITDA margins, but I think with commodity prices coming off, they should do better. So I would continue holding.
Okay, on that note, we're going to take a very quick break. We have more stock queries to answer, but we'll do that on the other side. Stay tuned. Hi, welcome back. We still have our two experts with us, Shahina Mukadam and Gaurav Ratnaparkhi. So let's get down to answering some more queries. We are connected now to Mr. Ravindra Y. He calls us from Bangalore. Hi, Mr. Ravindra. Good afternoon. Tell us what's your question.
Good afternoon, ma'am.
Go ahead, sir.
Yeah, I have 1,000 CESC
Yes.
shares.
Okay.
Whether to keep it or I have purchased at 72 rupees 35 cents. Now it is 78.35. Whether should I continue hold it or to dispose it off?
Okay, yeah, so the price is 72 rupees 30 paise. Got it. Shahina, CESC, he's making some money. What does he do?
I would recommend continue hold for some time because valuation is quite reasonable. It's less than one-time price to book, and it's a high dividend-paying stock, and the dividend yield is pretty good. And the positives are if there is a turnaround in the power distribution business, then numbers could be much better going forward. So I would continue holding the stock.
Okay, Gaurav, what is the target you have?
Yeah, so CESC for last 1 month or so is trading in a subdued manner. Basically, it's made an attempt to extend beyond its 200-day moving average, but couldn't sustain in the higher territory. And since then, it is consolidating. But nevertheless, if I look at a larger structure, then it is forming an inverted head and shoulders pattern, which is spanning over several months. And currently, it is forming right shoulder of that pattern. So this is actually an opportunity to add more. We can buy in the range of 76 to 78, keeping a stop loss of 72. And on the higher side, I'm expecting the stock to test the level of 100 once again.
Okay. Up next, our query comes in from Amarnath Singh. He has written in from Chandigarh. He has 600 shares of Tata Chemicals at 960. So he's making some money. He wants to know whether he should remain invested right now or for the moment take money off the table. Gaurav?
Yes, so Tata Chemicals basically has started a multi-month rally in July this year. So we are just into 3 to 4 months into this rally, and this rally can go on for next 6 to 8 months at least. In fact, in the month of September, or rather in the last couple of weeks, the stock has started next leg within this rally. So it has a long way to go on the upside. It has a strong support from its crucial weekly moving averages. Even the junction of 40-day exponential moving average and Delhi lower Bollinger Band recently acted as a strong support zone from where we are seeing buying emerging. So I am expecting further upside. Can add more near 1120, 1140 zone, keeping a stop loss of 1050. And on the higher side, I'm expecting the stock to test the level of 1240 from short-term perspective with a medium-term target of 1400.
Okay. Shahina, what's your advice?
I would continue holding the stock. It's a Tata Group company. The Tatas hold 39% of the equity, strong balance sheet, and basic chemicals account for about 75% of revenues. And soda ash has seen a very good, price movement. There was some bit of correction softness in the last couple of months, but I think the trajectory is up. So numbers should be pretty good on a YOY basis. So continue holding the stock.
Okay, Ketan Shah from New Delhi says he has 100 shares of SCI Shipping Corporation at 116 odd, and he has 100 shares of Ambuja Cement at 545. So he's making, loss in Ambuja Cement right now. But for both, he wants to know what are the future prospects and what is the advice. Shahina?
Well, Ambuja Cement is, I like it fundamentally in terms of, I think the valuation in terms of the core cement business is pretty decent. But there are some issues over here now, which I would recommend, one can look to book profits, look to partially exit from Ambuja, as well as, in fact, Shipping Corporation. Ambuja basically because, the promoter has pledged full equity of their full equity. The group has pledged it, both ACC as well as Ambuja Cements. And this combined with, if there is any softness in the stock price, if the stock price comes off, I think it can be a downward spiral and one can lose about 15-20% very quickly. In terms of sentiment wise, I think this is an issue. So I would be very cautious. I would risk it. I would term the stock as a very high risk as of now. I personally hold it, but from lower levels. But it's a part of a risky portfolio. Shipping Corporation, I would, really exit from the stock because the government has indicated in the near term it is going to exit from the business, and they've already started the process of demerging the real estate business. So a lot happening in terms of, the structure as well as, when and how it will be, how they will exit the business. So I would, just avoid both these stocks as of now.
Okay, Gaurav, what about you?
My recommendation will be to hold in both these stocks. Basically, Shipping Corporation of India is currently trapped in the range of 110 on the downside and 130 on the upside. It is trading near a very crucial medium-term falling trend line. It made an attempt to break out from that trend line in the last month, but could not succeed. Nevertheless, it can make another attempt. If it crosses the zone of 125, 130, then it will be considered as a breakout from the trend line. And in that case, the structure will turn significantly positive. So I would suggest hold the stock. And in the case of Ambuja Cement, basically for most of the cement counters, the medium-term trend is positive and the short-term correction is offering buying opportunity, and same is the case with Ambuja Cement. It has fallen back towards the junction of 40-day exponential moving average and Delhi lower Bollinger Band. And whenever these two parameters combine together, they generally act as a strong support for a short-term correction from where the stocks resume their medium-term uptrend. And same thing I'm expecting in Ambuja Cement as well. The weekly momentum indicator is still in bullish mode, and the daily momentum indicator has nicely completed the correction cycle till the equilibrium line. So the structure is indicating that the next move on the upside is around the corner. So can hold, keep a stop loss of 470 and expect the stock to head towards the level of 580.
Okay, Gaurav, Shahina, thanks very much to both of you for joining in today and for advising our viewers. With that, we're going to wind up on the show for now. Do remember to keep sending us all your queries. For now, stay tuned. The team of Closing Bell joins you next.